Let me tell you what most people still get wrong about silver. They keep acting like the whole story begins and ends at the mine. More ore, more silver. Less ore, less silver. Problem solved. That is the cartoon version. The real version is that a silver shortage, if it gets serious, may not start in the mine at all. It may start in refining. And if you miss that, you are not actually following the market. You are following a headline. I am recording this right now from Denver, and I want you to comment what day and date you are watching from because I always love seeing how far these videos travel, and I want the timeline to be crystal clear because this story moves fast. And real quick, if you value this kind of breakdown, do me a favor. Subscribe and comment FinTalk OG so the algorithm knows you want more of this. And now, in case you have not seen what I am talking about, here is the claim making the rounds. There is silver in the ground. There is silver in vaults, so availability is not really an issue. And on the surface, that sounds neat. It also skips the most important middle layer in the entire chain. Ore is not bullion. Scrap is not bullion. Concentrate is not bullion. The market needs refined metal in the right form, in the right place, at the right time. That is not the whole story. That is the story. So let us start with what we can verify. Recent industry survey data still shows silver running structural deficits, industrial demand staying very strong, and above ground stocks helping delay a full physical squeeze. That is the key. Delay, not erase. Here is the clean way to think about it. Or a restaurant can have food somewhere in the building and still fail dinner service if the kitchen cannot prep enough plates fast enough. That is refining. It is the kitchen. And when the kitchen gets strained, the market can look well supplied on paper, while specific products, specific forms, or specific delivery windows start getting awkward. Let me be blunt. A lot of silver commentary still acts like the market is one clean pipe. It is not. It is plumbing. Mines feed it. Scrap feeds it. Industrial residues feed it. Byproduct material feeds it. Then refiners, logistics, assay, energy, labor, and compliance turn that messy feed into metal the market can actually use. If one part of that system gets tight, the whole thing can breathe differently. Premiums widen, product delays show up, availability gets weird in spots. And the price chart alone may not tell you the full story right away because markets are pressure valves, not trap doors. Now, here is where it gets even more important. Silver is not mainly a nice, clean primary mine story. A huge share of silver comes as a byproduct of other mining operations. That means silver supply is already indirect. Now, add refining bottlenecks on top of that. So even if demand rises, you do not just turn one faucet and fix it. It is like steering a cargo ship. You do not pivot on a dime. Time is the weapon here. You cannot speed run a mine, and you definitely cannot speed run the whole refining and conversion chain. Now, here is the skeptical alternative. Could this bottleneck story be overdone? Sure, not every delay means crisis. Not every backlog means the system is about to break. And I'm going to say something that might annoy both sides. The fear crowd exaggerates this issue into instant chaos. The complacent crowd dismisses it because they can point to total inventory somewhere in the system. Both are lazy. The real question is not whether metal exists somewhere. The real question is whether the system can mobilize the right metal smoothly when demand pressure actually rises. So, what does this actually mean for you? Watch the pipe, not just the water level. If you want to understand whether a refining bottleneck is building, you do not just watch silver spot price. You watch visible inventories, retail premiums, industrial demand commentary, recycling flows, and whether product availability starts tightening in more than one place at once. Here is a question for you. Which do you think matters more in the next phase for silver, mine supply or processing bottlenecks? Drop that in the comments because I read them. Now, here is a simple action plan. No drama. Step 1. Decide what silver is doing in your portfolio. If you are a stacker, this refining story supports the idea that specific real world metal can matter more than people think. If you are a trader, then you are waiting for signs that physical stress is finally starting to influence price behavior. If you are in mining stocks, remember you own businesses, not bars. Step 2. Build a watch list. Product premiums, vault behavior, industrial demand updates, recycling commentary. Step 3. Do not make the common mistake of treating every anecdote as the end of the system. Instead, ask whether stress is broad or localized. Step 4. Keep it sane. Oh, silver does not need leverage to be exciting. It will provide the excitement for free. Now let us map two plausible paths without pretending we can predict the exact candle. Path 1 is the slow strain path. The market keeps functioning, but friction builds. More delays, more weirdness, more pressure on certain product forms. Silver grinds higher as the market slowly respects the infrastructure problem. Path 2 is the sharper stress path. A stronger demand pulse hits a system already running tight, and suddenly the market stops treating inventory totals as the whole answer. Then silver does what silver does. It does not glide out, it lunges. I am not predicting it. I am saying it is within the set of things this market is capable of doing. Now, here is the uncomfortable part. Institutions can navigate plumbing stress better than regular investors can. They have access, they have relationships, they have hedges. Retail investors usually meet the market through the worst possible combination: late information and strong emotion. And if liquidity dries up, institutions protect themselves at your expense. That is why a defensive strategy matters. 1. Decide your maximum allocation first. Write it down. If you are losing sleep, you are too big. 2. When something runs hard and you are up a lot, take some off. Not all some. If your position doubles, consider trimming half. Lock in the original bet. Let the rest run. 3. Do not use leverage or confuse narrative with mechanism or keep all of one thing in one place, depending on the topic. 4. The best time to buy is not always when you are most excited. The best time to buy is when you can still breathe. So here is what we covered. The silver story is not just about mining. It is about refining, conversion, logistics, and deliverability. Above ground stocks can delay a squeeze, yes, but they do not erase the importance of the kitchen in the middle of the system. And if silver tightens further, the first real warning may not come from a mine headline. It may come from the bottlenecks nobody wanted to talk about. That mechanism is doing something most people do not see or will not understand until it is too late. Stay alert, stay sized appropriately, and do not let simplistic supply headlines talk you out of understanding how this market actually works. Now, here are my questions for you. Do you think the next real silver stress starts in mining or refining? And if you own silver today, are you positioned for a slow burn tightening story or a sudden repricing event? Drop your answer below and remember to include what day and date you are watching from. If you got value out of this, subscribe and comment FinTalk OG so I know you want to follow up on retail premiums, delivery mechanics, or physical versus paper exposure. All right, stay sharp, and I will talk to you soon. And just so we are crystal clear, this is educational content. It is my take based on publicly discussed information and my own reasoning, and it is not personal financial advice. I am not your advisor. I do not know your goals or your risk tolerance, and I could be wrong. Do your own homework. Consider your situation. And if you need personal advice, get it from a qualified professional who knows your situation.